All right, everybody. Here I am, week 2 of Lender Live. Got some feedback from week 1, working on those things. Again, thank you for tuning in. Today I'm going to talk about a couple different subjects. We're going to talk about, starting with number 1, top 3 mistakes to avoid when filing taxes as self-employed. Now, I'm not a CPA. That's not the area that I'm going to be diving into as a tax professional, but more so as a mortgage loan officer, and some things that I typically see with people who are doing their taxes and want to use it to qualify for income. We'll talk about how to avoid some of those mistakes, and then we will also parlay into maybe some other types of loan programs that don't require taxes. So if you're self-employed and let's say you don't want to do what I'm saying, you may still want to qualify, and I can give you some advice on that. Topic number 2, qualifying for a mortgage with no income, and that's not what I was just mentioning. There's actually loan programs that don't require you to show any income at all, and those are for purchasing investment properties. So I figured I would bring that up. Make sure everything is muted here. Please, while you're here watching, feel free to drop any comments. Would love for any feedback or comments on anything that I shared today that you might be interested in yourself. Hello, I'm over here as well. And so I will be doing some visuals as well, and just maybe trying to show some stuff with the time that we have. I typically expect this call or this live to go anywhere from 30 to 45 minutes. It'll be available for replay. So again, if you have any comments, please drop those in. Even after the fact, I will answer those. So number 3, I want to become a real estate investor. How do I get started? And I want to tell you about a book that I recently finished reading. Did the audiobook version, but nonetheless, fantastic book. Highly recommend it. I actually have a realtor partner who also read this book and helped us both greatly with our perspective of investing and just kind of some things that you need to do. And there's so much to it, so I'm not going to be able to cover it all today, but I figured I would at least share my takeaways. Okay. So again, if you have any comments or anything while I'm doing this, please don't hesitate to drop those in there. So number 1, top 3 mistakes to avoid when filing taxes when you're self-employed. And I'm just looking at my notes here, so just bear with me. Keeping accurate records. Make sure you keep track of all your income and expenses throughout the year so you can accurately file your taxes at the end of the year. And that couldn't be more true. Obviously, again, not from the perspective of a CPA, but when you're doing your taxes and you're trying to put in everything like your deductions, your mileage, material costs, labor costs, all of that, I think a lot of people just kind of assume, hey, at the end of the year, I'll be able to go back, I'll be able to look at all my bank statements, kind of be able to track everything. And sure, maybe you can, but it's going to take you a lot of time and you're going to get frustrated. And so number 1 thing is to keep accurate records. I would recommend that you get a bookkeeper. It's going to be an added expense, obviously, but it will be something that will, in the long run, make a huge difference for you. And review your books at least monthly. so that you know, hey, are we on track? Am I documenting all the things that I'm going to need? And for me as a loan officer, things I can add back are things like depreciation, depletion. I can add back mileage if you choose to use it, if you're in the type of business where you have mileage. And so if you keep track of all that, you can, in a sense, pay a little bit less in taxes, but still show enough income to qualify. And so, again, don't wait until the very end of the year to go back and look at those things. So that's tip number 1. Tip number 2, not taking all the deductions you're entitled to. Self-employed individuals have many deductions available to them, such as home office expenses, travel expenses, and equipment costs. Make sure you take advantage of all the deductions you're eligible for. So, as I mentioned, number 1 is keeping track of all those things. Number 2 is making sure you're taking advantage of them. And, you can go online and you can look up different tax code and, try to do this yourself. But when you talk to somebody who's a certified professional who does this for a living, they're going to know a lot faster and also a lot more about where you can save. And then they work with someone like myself to help kind of marry the two as far as the best tax situation for you and then also the best income situation as self-employed. So don't miss out on those. Depreciation, like I mentioned, is a big one. Mileage, and there's a few others. But those are the ones that we see most often. There are things that can hurt you in your income that might be deductions, but are going to take away from the income that we can use, and that's going to be something like meals and entertainment or travel. You may have to take it. It may make sense for you, but it will work against you as far as when we're calculating your income. So number 2 is, again, make sure you take full advantage of all those things. And married with a bookkeeper, probably a good idea to have a CPA, somebody who you're meeting with regularly. It depends on the size of your business. If you're a smaller business, you may not need all of that. But if you're getting bigger, you're growing, you want to really outweigh, is this really worth it for me to be doing these things on my own, to do my own bookkeeping, or should I pay somebody so I can focus more on my business as opposed to in my business? Tip number 3, and this will go into something else, but failing to file on time or pay estimated taxes. If you don't file your taxes on time or pay estimated taxes throughout the year, you may be subject to penalties and interest charges. And so again, while I'm not a tax professional, I know that to be very true, that you really don't want to underestimate what the tax liability is going to be. And on top of that, when we're using your tax returns to qualify you for a mortgage, we're going to require that you show evidence that you've paid your liability for each year that you're using to qualify. And as self-employed, you're typically using 2 years. And so we will require, an example, we'll require 2021 and 2022 tax liabilities to be paid in full. We have to source them in order to actually use that as income. You can't just show, hey, this is what my income is, and not actually pay the liability to the IRS. So that would look like something like showing, bank statements, showing, something from irs.gov to show that you've actually paid that liability. Okay, so that's super important as well. Thank you for the thumbs up. Again, this is just the second week of doing this. It's kind of hard to manage everything. I'm just going off of one camera right now and just my notes. But if you guys have any tips or feedback, I would love to hear that. So, okay, qualifying for a mortgage with no income. Again, this is not what I was just talking about. This is not for self-employed. This is if you are looking to purchase property and you don't want to either show income documentation, or show income on your tax returns, number 1, or if you don't have income to show, but you have a large amount of money, okay? What we're looking for, and what this is called, is a debt service coverage ratio loan. It requires 25% down, and it's for buying an investment property, okay? So I figured I would give a little example here. All right. Okay, so 25% down. We'll take something like 300,000 purchase price. Okay, so let's say you have $300,000 investment property you're looking to purchase, and yes, they do exist. And we're going to talk about the next step, which is, finding investment properties, in a book that I'd love to share. But 300,000. This is called a DSCR loan. Okay, and that stands for debt service coverage ratio. If you put 25% down, all right, so 300,000, 25% down, it's going to be a loan amount of 225. Okay. Whatever your monthly payment is on that loan amount, which I'll give you kind of an average monthly payment on something around 300,000. It's going to be about $1,800 a month. Okay. That's an average. Could be higher, could be lower. Depends on your taxes, depends on interest rates and different things like that. So $1,800 a month. With this program, all you need to do is get an appraisal on the property. And it's not just a standard appraisal, it's actually a rent appraisal. It has an additional layer to it where the appraiser is not going to just tell us how much the home is worth if it meets the 300,000, but also what is the rent comps on this property. So they're going to do research to see what rent is for a property like this in the area. And let's say that the rent comps is $1,900 a month. Okay, so you have put down 25%. You've shown no other income documentation. No tax returns, nothing like that. You have your driver's license, and we do pull credit just to see what your credit score is. That's how the interest rates end up getting determined ultimately with a program like this. If the rent comps come in over $1,800, doesn't matter how much, but at least comes in over $1,800, you are approved. Simple enough. So that is showing no income whatsoever. It's a great way for investors who are getting started, self-employed individuals who want to get into investing, or people who they use this regularly for purchasing investment properties. It can get a little bit complicated when you are when you have 3 or 4 or 5 investment properties. You have to show documentation for that, lease agreements. You have to show tax returns for each of those. This is a way to get around that. And I think it's a fantastic program. Thank you, Frank. Appreciate that, my friend. So that is called a DSCR. Okay, I'm going to give you a couple more points on that. Like I said, credit score is important. These programs will go as low as 680. However, you can qualify, we recommend that you have a higher credit score. The interest rates are going to be a little bit higher when you have a lower score. So that's just something for you to think about. But no income needed, nothing of that nature. So it really is helpful, I think, for people that like self-employed. Please feel free to drop any comments or any questions that you have. I'm trying to just cover, these are topics that I came up with, but really in theory, this is time that I'm designed that I'm taking out of my day, trying to do once a week to just answer anything that might be out there. So, I do videos all the time that are short videos that there's no interactivity with those. And this kind of video is where I wanted to create some sort of interaction. Figured I got to do it for a while to get some more traction with it. But, free advice. Don't need to, you don't even need to give me any information whatsoever for any questions that you have. So, that could mean if you're currently under contract and you have a question on something, I'm not going to solicit for anything there, but, feel free to drop any comments or questions. Okay, so I'm going to talk about a book. Let me grab. So I just finished the audiobook for this last week. I think it was 10 hours. audiobook, and by no means am I an expert at this point on this, but I thought it was a really, really good one to share. It's called The Book on Rental Property Investing: How to Create Wealth with Intelligent Buy and Hold Real Estate Investing. Brandon Turner. So I'll read the back of it, and then I'd love to just kind of share a couple of the things that I took away. So every strategy, tool, tip, and technique you need to become a millionaire rental property investor. If you're considering using rental investing to build wealth or obtain financial freedom, this book is a must read. With nearly 400 pages of an in-depth advice, the book on rental property investing imparts practical and exciting strategies that investors across the world are using to build significant cash flow with rental properties. And it goes on to talk about, the forums and the tools and the forms that are out there that they have on their website. Inside, you'll learn why many real estate investors fail and how to ensure your success. 4 unique strategies you can begin implementing today. Creative tips to find incredible deals in competitive markets. How to succeed with touching a toilet, paintbrush, or broom. Ideas for financing rentals no matter how much cash you have, and how to keep your wealth by deferring and eliminating taxes, otherwise known as a 1031 exchange, and so much more. So again, that is real estate property investing, rental property investing. Figured I would just share just a couple of things on that. Any comments, please feel free to drop those. So one thing that I hadn't previously known or looked into that I really liked was, negotiating is power, right? You got to be able to negotiate. You can't get too emotional in these types of things, and you're not looking for a property that you're going to be moving into. You're looking for something that's going to cash flow for you. And so when it makes the most sense, when you've done all your research, which again, it kind of gives you the points here, you want to get a property that's about 20% under market value. And you may say that may be difficult to find. It talks about these stories in the book where there are people who, are investors, and they know when they walk into a property and there's a funny smell, or there's just something that is out of date, that is an easy fix, right? Maybe there's pee, right? The smell of pee or something like that. Most homeowners who are looking to buy a single family home for themselves, they're not going to be able to get past that smell. They're not going to be able to get past whatever that is. But as an investor, that's the smell of money right there, because this property is listed. Clearly, it has some things that need improvements. That may not cost you a lot of money. If you know somebody who can come in and maybe rip out the carpet or do a really good cleaning, you can get that property below market value, and then do some sort of small improvement. So you can make about a 30% increase in your investment right away, just by looking at purchasing real estate differently than you would if it was a primary residence. And so I think that's first and foremost one of the things that I like. Building a strong network cannot be understated or overstated enough, that a network of people who can help you with your investing. And that may be somebody who's looking to invest with you and take some of their capital, but it also may be, you need to have other individuals, other professionals. Unless you plan on doing everything yourself, you have to have other professionals. You want to have a property manager. You want to have, just a simple handyman, somebody who you can trust. And, that can take some time to build that, but that's a super important thing, because you're going to waste a lot of time and money if you're trying to find those individuals once you own a piece of rental property. I'm in a networking group where we have a property manager, we have somebody who does remodeling, we have a painter, we have HVAC, plumber. We have a lot of those trades, and those will come in handy when you're buying an investment property. And so find those individuals first. Find a team, right? Maybe an attorney. Make sure you have a real estate agent. Find a team, and then that's going to make your job a lot easier when you're doing investing. So 1031 exchange, this is a way to defer taxes when you're selling one investment property and you're purchasing something else. So a 1031 exchange, it is a way to avoid any sort of capital gains tax that you have from the appreciation and the equity that you have gained in the sale of that property. So if you don't know, when you sell an investment property, you will, on your next year's tax returns, pay capital gains if it's a primary residence or a second home. If it's an investment property, you would also pay those capital gains unless you choose to defer those taxes using a 1031 exchange. There are some requirements with that, but the biggest thing is you can never touch any of the money that is made from the sale of that property. If you do, you will inherently pay taxes on it for the next year. You use a 1031 exchange company, all the money goes into their account after the sale of your investment property, and you have 45 days to identify another property that is of equal value to purchase. If you do that, you will pay no capital gains tax whatsoever. You have to identify one property within 45 days. They do allow you to pick up to 3, and you can write contingent offers in case one of them doesn't go through. But that is a hard set 45-day window that you have. So you want to try to identify those properties before closing on the one that you're selling, or at least have an idea. And then you do have 6 months, so 180 days to close on that property that you're purchasing and still qualify as a 1031 exchange. If it takes more than 6 months, then again, you will pay taxes on the capital gains in your next tax year in your investment property. So that is a 1031 exchange. It actually goes into a lot of detail in the book about it. I have dealt with 1031 exchanges, as a loan officer, and dealt with 1031 exchange companies. But some of the nuances with it and some of the other tax things that you should be aware of, I wasn't so aware of. So it was really good to get some of those pointers. There's a lot of other things I'm not going to go into, but again, I highly recommend this book, Rental Property Investing by Brandon Turner. You can find it on Amazon, audiobook. If you want to chat with me about it, love to. Probably will have to read it again just to let some more of the things sink in. But really like it. So let's see. Last week I talked about annualcreditreport.com. Show of hands, anybody who's watching right now, did you get a chance? Oh, Rebecca Oberkanik, thoughts on the 40-year mortgage for those who took forbearance and how it will limit foreclosures, aka investment property inventory. So I know what you're talking about, Rebecca, the 40-year mortgage with FHA. Personally, I have not done a lot of research into it, so I don't want to speak too much on it. I do know that it is for strictly for loan modifications, which is not going to be when you're purchasing a home. It's a previous loan that you have and you're trying to avoid foreclosure, like you said. And so it's a modification. It's going to extend the term of the loan. Obviously, you will pay more interest. I believe, if I'm not mistaken, it'll be the fair market interest rates that are happening right now. So if you have a 3-year or 3% interest rate and you do a 40-year FHA loan mod, you're going to get whatever the current rates are. And correct me if I'm wrong on that. But we haven't run into it. It's not really something in the origination field that I'm anticipating that we'll run into too much. It's going to be more on the servicing side. And then investment property inventory, I'm not 100% sure what you mean by that. So maybe if you could put a little bit more to that so I know. And while you're doing that, I'm going to share. So last week, like I said, I had a chance, or I was sharing annualcreditreport.com. This is a tool I tell a lot of people about that is a free resource for you. Okay. It is not a credit card company that is paying for this, unlike Credit Karma. Yes, that is a credit card company that is essentially wanting you to use this tool. Annualcreditreport.com Let me get this up here. Is a way to get access to your credit reports. You can see all three: TransUnion, Experian, and Equifax. And while you don't get your scores, which I think is what a lot of people ultimately want, right? Is they want to see what their scores are. You can get a rough idea of your scores using your bank. You know, they may have like a free credit reporting thing. Keep in mind, those are not the same ones we use for a mortgage. But this is a powerful tool. Why does it seem like I also have my notes on there? Hold on one sec. I do. Let me get rid of that. There we go. It's a tool to at least, I would say, audit your credit report and make sure that everything that's on here is accurate. So you can see every single thing that is being reported, the same thing that I would see as a loan officer, you can see on here for free. And it does say once every 12 months, but I know during COVID, they were allowing you to get one report for each bureau a week. I don't know if that has changed. I mean, obviously it says 12 months right here, but that's the whole kind of principle behind it. So maybe they still allow you to get it more often. If somebody knows, please let me know. I haven't tried it. But again, request your free credit reports. And yes, it's going to ask you very personal, pertinent information. Once you get into here, you can then start disputing anything that doesn't look right. So again, it's not just a tool for viewing your information, but you can also dispute. You can see any of your address history, anything that's on there. And you'd be surprised at things that end up appearing on people's credit report that they had no clue on. So again, great tool, great resource. I recommend it to every client. Even if I'm pulling their credit, I still tell them about it so that they can use this as a tool down the road to monitor their credit. They don't have to pay anything to use this whatsoever. Okay. It goes on to talk about identity, FAQ, and then contact. The other one I talked about last week is myfico.com. And while, yes, this does have some paid services to it to be able to get your score, what I really like about this, if it loads, it's kind of going a little slow here. It's probably my computer. I promise it's not like this normally. What I like about this is, again, more education. I think knowledge is power, especially when it comes to your credit. Having good credit, knowing what to do if something is inaccurate and how to get it off, that can save you thousands and thousands and thousands of dollars by simply just knowing your credit, improving your credit, and using tools like this. For some reason, it's not loading. I think it's probably the web browser and everything I'm doing together. So, but myfico.com is another great resource. So I showed it last week. Go back to that video. I went into detail on things like the mix of credits, how your score is derived. 65% of your score is your payment history and the balance on your credit cards. Okay. Only 10% of your credit score is made up by the mix of credit that you have, which would mean, revolving debts plus installments plus mortgage loan history. So 10%, it's not a lot. 65% though is made up by the history of your on-time payments. Okay, if you have any late payments, those are going to affect you in a big way. 35%, and then 30% is based on your balances on your revolving debt. Okay, that is not your car loan. That is going to be a credit card, and you want to have that below 20%. 10% is more ideal, but 20% is you're still okay with that. Yep. It's not loading. All right, let me see. How do I get this off, Rebecca? You don't know. I'm just talking. There we go. Okay. Let's see. I'm new at this live thing, so again, I post videos all the time. If you're not following me on Instagram, please go do so at Brandon Harwood. I try to post videos, add relevant information, but live is a little harder, like just knowing what to talk about and coming up with topics. So I appreciate the 2 people who have been here the whole time. So thank you so much, whoever you are, wherever you are out there. But I mean, right now I'm just kind of rambling on and trying to come up with a couple different topics. What I need to do is, kind of plan out more in advance. Like, what do I want to talk about? Having an idea, like having some presentation slides to show, perhaps, with engaging with video and getting some comments. As of right now, working on that. So, little plug for any past Academy Mortgage clients. We are doing a giveaway, the Phoenix Suns tickets. So we did our first drawing on Friday, and that was for yesterday's game. Unfortunately, the Suns lost, but we did give away center court tickets to one of our past clients. Adrian Gonzalez was the loan officer, and then his past client, I believe his name was Arthur Louderback, won 2 tickets to go to the Suns game. So that was really cool. We are not doing it for tomorrow's game. However, the series is coming back here now because we lost 1 game, and it's going to be at least a 5-game series. So we will be doing, and I think I'm the one who will be doing the drawing, so check that out on my page. But I will be doing a drawing for another round of that, center court seats. Again, the qualification is you have to be a past Academy Mortgage client, and it's pretty exciting. It's pretty cool that we're doing that. I know that our regional Thomas is wanting to do more things like that, and again, I'm happy to be involved in the process in a small way. So hopefully one of my clients wins it. That would be really cool, because then that means I get to go with them. So, but Adrian, I'm jealous. All right, about 30 minutes. I think it's about it that I got for today. Again, maybe next week, give me some feedback, give me some comments. Next week, I think I'm going to try to do more of a presentation style instead of just kind of on the fly trying to show some websites that clearly are not working very well, or using my iPad. So again, thank you for tuning in. This is my Lender Live. I'll be doing this on Mondays at 2 o'clock going forward. And hope you're having a great Monday. If you have any questions, feel free to reach out to me. All my information is on my page. And thank you again. I'll talk to you soon.